Hello and welcome to this session in which we would look at the payroll and personnel cycle. In this session, we would look at the basics. Basics means what? We're going to look at which accounts are involved, the typical journal entries, and the people. Why the people? Because in order to understand the internal control, you need to know who's involved in this payroll and personnel cycle. So the payroll and personnel cycle starts with hiring someone and ends with paying them for their services. Now, obviously, the technical ending is when the employee leaves. But as far as accounting is concerned, when you pay the employee, that's basically the end of the cycle. Then you will need to pay them again. And this also includes, you remember, when you pay an employee, there are certain percentage of your pay goes to the government. It includes payments to government and other institutions for withheld and accrued payroll taxes and benefit. For example, if you are paid $1,000, some of it, maybe $300 goes toward taxes, $100 of it goes toward your insurance, and maybe another $100 goes toward your retirement 401k. So you will end up getting $500. So any withholding, whether it's for the government or for benefits, that we have to account for that. We have to audit that. So why is this cycle unique? Let's think about it. Think about the payroll. The payroll cycle involves people. And what happened? When you are paid, you look at your paycheck very carefully. You want to make sure you are paid the proper amount, the proper withholding is being taken, and the company also wants to know how much they are paying their employees. They don't want to pay them more or less for that matter. If they pay them less, the employee will complain, and if they pay them more, the owner of the company will say something. Usually, there's one class of transaction in this cycle, which is what? Paying the employees. That's what we do in the payroll cycle. Therefore, the transactions themselves are usually significant more than the account balances. So when we look at payroll, we will be looking at the transactions, because think about the transaction themselves. How many transactions will you have for payroll? Usually twice a month, either bi-weekly, every 2 weeks, or mid-month. Twice a month. Now, although it's transactional base, even small companies will have effective control over payroll. Why? Because there's checks and balances here. The people who are getting paid, they're careful. People who are paying are also careful. And always the payroll cycle and the payroll payment are processed separately than paying the vendors. It's a two separate process. So owners don't want to overpay. The employees certainly don't want to be underpaid. So in this session specifically, we will focus on the accounts involved, specifically the basic accounting of it. You have to understand the basic accountings. Then we would look at the various groups, individuals, people who are involved in this process. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true false questions, as well as exercises. Go ahead, start your free trial today.
Starting with the accounts involved. Which accounts are involved? Obviously, cash will be involved, salaries and wages expense, payroll tax expense, accrued wages, withholding income taxes, and accrued payroll tax expense. So in this session, I'm going to walk you through a simple example, basically to remind you how all these accounts interact. In other words, what is the accounting cycle? This is the actual accounting, accounts involved. So let's see. Let's assume we're paying our employees $10,000 every 2 weeks. Well, we debit salaries expense, $10,000. The company will say we'll have an expense of $10,000. Of that $10,000, $3,500 is withheld as income taxes and other deduction. So when you pay the employee $10,000, those $3,500 could be for federal taxes, state taxes, 401k, health insurance, other deductions. Those we take it out of the paycheck and we cut the employee will get 6,500. Well, you know what? Let's make it for a simple. Let's assume this is one employee, just to make it simple. It could be many employees. Let's assume one employee. So we pay an employee 10,000. That's the expense. Of that amount, we withheld 3,500, which are required withholding. Then the employee got 6,500. Now, in addition to that, the employer, because they have employees, they will have payroll taxes. So you will have a payroll tax expense. What does that mean? In addition to paying the employee $10,000, the company will have certain payroll tax expense. Let me give you an example. When you are paid as an employee, you pay Social Security tax. Let's assume you pay $100. Your employer will have to pay $100 in the US. Same thing for Medicare. You pay $500, your employer will pay $500. The employer will have certain payroll tax expenses that they have to incur. So let's assume for the sake of this employee, because we pay them $10,000, there's a 10% payroll taxes, various payroll taxes. Therefore, we debit payroll tax expense. That's an expense, 1,000. And since we're not paying this expense now, we are going to accrue payroll tax expense. This is basically a liability. Payroll tax should be liability. So we accrue this liability. But basically, it says it's accrued. Basically, just know this is a liability. It's an accrued. So this is a liability. Now, what's going to happen eventually? We are going to pay, because this is also a liability as well, the withholding of income taxes. That's not really our money, that's the employee money. So notice we have a liability of 3,500 and a liability of 1,000. What are we going to do? At the end of the month, the following month, there are certain rules we have to follow. We have to send this money to the government or to the 401k or to the insurance company, then we pay it off. What we do is we credit cash, we debit deduction. Now notice here I make the withholding go down to zero. It doesn't mean you're going to pay all of it. And I also made the accrued payroll taxes go down to zero. I zeroed out the liability. That doesn't have to be the case. You could have a balance. You may not have paid all the liability by the end of the period, but the reason I'm keeping it simple, just to keep it simple for you. So eventually you have to pay the liability. That's another source of transaction you have to deal with. What else do we do sometime? What we do sometime is at the end of the accounting period, we have to accrue expenses. In other words, we have to debit expenses. For example, at the end of the period, we debited salaries expense, $3,000. We are not paying this expense now. We will credit accrued salaries expenses, which is a liability. So we debit an expense, credit a liability for 3,000. Then eventually what do? We pay off this liability. We debit this liability and we credit cash for 3,000. But those are typically the transaction that occur in the payroll cycle. So if you are not sure and you want a little bit more, go to my intermediate accounting. Under my current liabilities chapter, we go much more in depth in payroll. But at this point, if you're taking an audit course, I'm assuming you are familiar with journal entries that deals with payroll. I just gave you an overview, but if you want a more depth, go to my intermediate accounting, farhatlectures.com. Let's take a look at this multiple choice question from farhatlectures.com. The verification of pay rate changes and changes in wage deduction for employees are the responsibility of who? Notice it's the verification. It's the verification of the pay rate change and changes in wages deduction. Is it HR, accounts payable, treasurer, general accounting department? Well, let's see, try to eliminate certain easy answers. Is it the accounts payable? No, accounts payable don't handle payroll. Remember, I told you payroll is a separate process. It's handled differently than paying your suppliers. Is it the treasurer? No, the treasurer actually signs the check, and they should not be able to change the record. That's out. Is it the general accounting department or is it the HR department? The general accounting department keeps track of time. The verification of the pay rate change, make sure it's correct. They verify it. It's HR. HR confirms that the pay rate is changed based on maybe note from management. Say, okay, we'd like to increase the pay rate for a certain employees. But who does the verification? HR department. What should you do now? You want to go to Farhat lectures, look at additional resources, MCQs, lectures, true, false, whatever is available to help you, whether you are an accounting student or a CPA exam candidate. Invest in yourself. Good luck and stay safe.